Hey guys, welcome to another episode of a market review using ICT trading concepts on Wednesday, the 31st of August. So today, bit of an interesting day. I woke up this morning, checked Twitter, had a look at ICT's tweets, and something he reminded us of was that if you are a new trader or someone that's learning the ICT concepts, especially on an intraday trading level, so day trading, we should avoid trading on non-farm payroll weeks, but not all week, but have a cutoff from Wednesday New York trading session onwards. So no trading on Wednesday and Thursday, and then wait for the news event to be delivered on the Friday morning, and then take a play and watch that volatility and see if there's any setups that play out then. So just before we go into the charts, I'll show you the tweet that I'm referring to. So as part of the rules. He later says, if you are a developing trader, but the rules are trades are not entered after 7 a.m. on Wednesday of non-farm payroll weeks. But obviously, open trades, if you're a swing trader, got some trades open from the London AM session, they can be managed. But you kind of want to be out of those positions by London close of Wednesday. You might be asking yourself why this is the case. So as we are, using the ICT concepts, which are based on a market algorithm that is constantly repricing during certain times of the market hours. Basically, the algorithm uses this opportunity to build liquidity on either sides as we drive into the news event on the Friday. So what that basically means is we would be ranging, and it's difficult to trade ranges, if especially if you're a new student. But that doesn't mean that you can't trade. If you're an experienced advanced trader, then obviously you've got the experience to trade in those kind of conditions. And if you see an opportunity, go for it. And that's exactly what ICT did. So I'm just going to do something a little bit different today. So instead of reviewing S&P at the charts for myself, so what I did, I wasn't actually at the charts today. So after seeing ICT's tweets, I used that as an opportunity to step away from the charts and actually go through some mentorship material just to continue learning, deep diving into some of the concepts, and then use this market review opportunity. So I just had a look at the charts about half an hour ago, just in preparation for this recording, and then did some markup as well. Some of the trades that I saw on some of the Forex pairs. So had an opportunity to review it, and when I saw that ICT took a trade, I thought, he posted his markup as well. So I thought, what, let's have a look at that as part of this recording and review it. So on the S&P 500 on the 1 minute chart, this is what he posted. And if you take a look at the chart yourself, so this blue rectangle is a fair value gap that was created on the 5 minute time frame of just around 6 a.m. in the morning, New York trading time. And what we can see here as part of the trading action going into the market opening and the equities opening as well. We saw he's identified that there's some sell side liquidity created here, some relative equal lows, and as part of the equities opening up here at 9:30 a.m., we saw a huge drop down in the market in the price, which I guess what the algorithm is doing there is it's reaching for that sell side liquidity, but also it's almost tricking the retail traders, saying that we're the market is moving down today, and they see this previous high here, and they see this as potential resistance, and then all of those guys will be shorting up here, and what will they be doing with their stop losses? They'll be setting it up here. So that is a target later on. But as we drive down into this price action, we can actually see that price um, retraced into this 5 minute fair value gap, filled it. It didn't break it. It respected it very, very nicely. And then we saw, a retracement back into this range here. One thing that ICT notes is that, well, we can see for ourselves actually, as a developing student, what you'd want to look for here is, okay, we've seen price takeout, sell side liquidity, drive into this fair value gap, and then we want to look for a displacement. We want to see a market structure shift to the upside. And as part of that, we would want to see a fair value gap and then see that fair value gap repriced into, which would give us our opportunity to open a long trade and target this swing high over here, these highs over here. But as you can see, as part of this action, there's no retracement into that fair value gap. But what ICT uses as his entry is this order block, this bullish order block, which is this last down candle here before we see price retrace back to the upside. And as price then touched the top of that bullish order block candle, and that was his entry, and then entered his long. We can see that he took a partial at the equilibrium of this range. So if you was to draw a fib from this range high to this range low, you'll get your equilibrium at around about this point, which lines up with this fair value gap to the downside as well. So that would be the initial target. As we can see here, 50% was taken off, and then the rest of your target would be targeting these highs over here, where the retail will place their buy stops. And then another thing that ICT notes is that, okay, he took off another 3 contracts here, and then he sold the rest of his 2 contracts at these levels once price retraced back into the mean threshold of this bullish order block candle. So I'm guessing what he's trying to say here is, if we did want to see a continuation in price to bank a higher target, we wouldn't want to see price retrace back below the mean threshold of this bullish order block candle. And as you can see here, this candle did exactly that, and I guess that's what triggered his the rest of his sells, so exiting his position completely. And then as you can see, what happened after, price then dropped back down to the lower levels. So that was a very nice trade from him. I would say that it's a bit of an advanced trade, not only because we're trading during non-farm payroll week, 2 days before the event, but it's essentially quite a tight range, and there's a lot going on here, and there's no actual fair value gap to have offered the entry. We're using an order block here, so yeah, more on the advanced side, but it's definitely something to work towards. So really nice for me to review and add this to my kind of trade journals as well. So next, what I'm going to do is I'm going to quickly review a few of the charts. So we've got the dollar index. Again, we're still floating at this range. Bit of no man's land, I guess. Not a clear bias, whether we're bullish or bearish, which we can use as a correlation to the other markets. So from my perspective, if we were trading, you just want to look for opportunities within the charts themselves. There's some very clear opportunities to try and take some profits. So 2 opportunities I saw today: one on the Euro USD and one on the GBP. From my perspective, I was under the impression that Euro, USD, and GBP they correlate with each other. So if one's bullish, The other one is bearish, bullish as well. So they're kind of moving in the same direction because they're based on the movements of the dollar index, because the base currency is USD. So if the USD is strong, then the euro and the GBP will be weak. Interestingly, Euro USD offered me well, when I reviewed it, I saw a long opportunity, and then on GBP USD, I saw a short opportunity. So it's quite interesting, a bit of interesting volatility, and I can see why, not really ideal trading conditions, I guess. So let's take a look at it's still good for me to break down the setup, because it helps reinforce that understanding of price action, regardless. So on EU, what we can see here, yesterday's price action. So what I like to do is I like to separate my days with this white dash line, this vertical white dash line, and then it's really easy for me to identify each day's highs and lows. So yesterday, you can see these two lows here, relative equal lows, and what do you have beneath those lows? Resting sell side liquidity. So today, during the London trading session, we saw price drive into that sell side liquidity, and from my perspective, if I was trading at the charts, I would want to see displacement to the upside, market structure shift, and then eventually kind of target these highs up here, and even the high of the previous day, which is this candle's high over here. So if we dig into the lower time frames, just trying to remember on which time frame I saw the setup. So some really nice price action here, really bread and butter stuff. ICT fair value gap strategy, bread and butter setup from my perspective. So what we can see here is, during the midnight opening, we saw price rally up and then drop into the sell side liquidity that I highlighted earlier. And then what we saw here was this type of action, which is something that ICT actually goes over. So what we saw this, which took out the sell side liquidity, created this swing high, and then continued with this action. And what we saw next was, again, a dig into taking out any stops beneath there. And then what we saw was a move upwards. Oh, you get the drawing tool again. So we saw a move upwards, and what did that result in? A market structure shift of this swing high, and as part of that displacement, what do we see? We saw a fair value gap created here. And as part of that fair value gap, what did the price do after that? We saw this beautiful entry back into this fair value gap. So at 8:30 a.m., between the New York AM kill zone, we saw this beautiful long opportunity. So what would that long look like? So if I just remove these, if I get my tool here to draw along with, so what we would have done is we would have entered along at the top of that fair value gap. Our stop loss would be just beneath the swing low here. Yep. And then if we target, what would we have targeted? I'd have personally targeted, if I draw the fib from this range high to this range low, just to try and get an understanding as to where we are with regards to the equilibrium and the premium and the discount area of this range. So, as part of this range, below the equilibrium, we're still in a premium area. And then above, we're in a discounted area. Sorry, other way around. Because we're longing, but below the equilibrium is a discount area, and above is a premium. So in terms of targets, we would have targeted this fair value gap just below, just above the equilibrium. So taking some partials there, and then eventually targeting this swing high here, and then your final target would be the high of the previous day. So over here, and we saw that taken out. So that would have been a really beautiful trade there with some nice returns on the table. I know this is in hindsight, but yeah, it's a really nice opportunity. Let's go over to GU, and what we saw here is a short opportunity, like I mentioned. It wasn't as this short opportunity on GU, not as crisp as the setup we just saw on EU, but from my perspective, it was a setup available. So let's review the price action. So yesterday we saw this move down, and you can see a fair value gap created on the hourly time frame. So let's just take a look at that. So as part of this price action, I identified a fair value gap here. So as I reviewed this price action here, we can see that during the London trading session, we saw price dig into this fair value gap and wicked up, but the bodies of the candles respected that fair value gap very, very nicely. And what do we see here? We also see a swing high being formed. So an indication of potential bearish price action coming, which would line up with retracing into this fair value gap and then potentially it continuing its journey back down. So if we go into a lower time frame, so that fair value gap on the hourly is still there. We can see even the bodies of the 15-minute candles respect that gap very, very nicely. So from my perspective, what you would have wanted to see is, yes, if we are respecting this fair value gap and we're looking for potential short opportunities, we want to see a nice energetic displacement lower, taking out some of these swing lows, the higher lows on this uptrend here, so causing a break in market structure. So if we just switch to a lower time frame, as there wasn't much clear price action there. So what we saw here is we saw this price action to the below, and we saw this fair value gap created here, and we saw this candle respect that area, and that would be confirmation for me to potentially look at some shorting opportunities. So trying to enter up here it would still be a potential opportunity, but maybe slightly high risk, because you haven't really got a nice break of the market structure, as we can see coming up here. So what I did was I would have, as I was marking this up in hindsight, I noticed that we dug into that fair value gap, and then we had another energetic displacement to the downside, causing a nice break in market structure of these higher lows here. So if we switch to a lower time frame and look at that price action over there, if I can find it. Right, so we saw this fair value gap price digging into this. I think you'd have struggled to probably get an entry potentially, just because if this was live trading, the spread on the trade may not have entered you in. But you'd still be monitoring the trade going forward and seeing what other potential opportunity you have. So this was actually during the London AM kill zone actually. So this, what you can see here, this displacement lower on the minute time frame, we saw a fair value gap created here. And we also saw a fair value gap created here. So what ICT teaches is that as part of, you know, a move down, you want to concentrate on the first fair value gap that price will re-enter back into with respect to the equilibrium. So if we draw an equilibrium from this range high to this range low, we can see that the equilibrium is at this point. We see price going above equilibrium, digging into a discounted area, respecting, you know, the 61% point on the fib, and you know that would have been a nice entry for that fib. So if we'd have on that range there, so if we'd have taken that entry, for example, our entry would be at this point, and yeah, so we would have entered here. And then in terms of the stop loss, you still want to take into account that price can retrace back into this fair value gap here. So your stop loss would be, you know, around about this swing high here, or you could even play it much safer up there if you wanted. So if let's set it to there, and then if we zoom out a little bit, where would be our targets? We would see that our potential targets would be the likes of taking out, just delete this fib, taking out sell side liquidity here, sell side liquidity there, and then you know, taking out partials along the way at, you know, correct kind of opportunities to do so. So you know, you could identify that we have this fair value gap over here. So you know, that would be a potential partial opportunity as well. We can see, you know, price kind of reacting to that area, but then, you know, closing your trade at the final target would be the low of yesterday, which, you know, at the final point would have been a nice, you know, 4-1 overall, depending on how many partials you took out. So yeah, you know, bit of a long review there, but a lot going on. Stuff seems to be clicking, and you know, one thing I do want to just close on is that ICT mentions that August itself is a very sloppy month for price action itself. He does not recommend live trading in August conditions, just because the price action that the algorithm offers is not very clean as it would be in normal trading months. So, you know, tomorrow is the 1st of September, and then probably won't be trading tomorrow anyway, the day before farm payroll event. But next week, looking forward to, you know, continuing demo trading and see what kind of conditions we have starting in September. So thanks for tuning in. Hope you enjoyed this. Have a good night and speak to you soon.